Hi everyone, welcome back to this week Weekly Market Update. It's a good week, like I said. Things is because a good week is because my predictions actually came to. The market came to where I predict previously on the last week. If you have been following me closely, so I know that the market is on the red side. It might actually affect your portfolio, or it might actually cause you to be in the red P&L. But if let's say you have take some of the pinch of salt from what I have advised last week, it should somehow save you a little and also make you in the green profit like what I did as well. So take a look on last week. I did really do some video. I've written in my Facebook page as well. I have also posted in my Telegram group. If let's say you are one of them as well, you should have a latest update. So what happened on last week? You can see that Dow Jones, after broke below 34,300, we are eyeing for the next support level at 33,500 and 33,300. Exactly from the charts, as you can see from last week perspective, or this candlestick itself on the Wednesday 27 September, we can see that the market goes as low as 33,306 point itself. All right, definitely it touches the 35,005, 33,500, and then it continued to drift lower. But on Friday itself, the market closed at or very close to 33,507. So this 33,500 is actually a very crucial support level. Um, Closing at this level is actually hard for you to guess what is going to happen next following week as well. Not to forget, next following week there is a heavy economy data releasing as well, like non-farm payroll. Like for right now, if let's say you have been going through what is the market is talking about, I think they are talking about whether the government will shut down, the Congress face funding deadline, these kind of things. Yes, be talking over this weekend itself. So yes, we know that this is, even if shutdown is temporary, but this temporary will cause some panic. So from chart perspective, from fundamental wise, from news wise, I think maybe a higher chance that it may continue to drift lower. All right, so what will we do right now? Just have to rewrite on today is actually 1st October 2023. So Dow Jones may continue on the downside and eyeing 32,005. Of course, it might go break 33 and then 32,005 as next support level. All right, so whether there's any technical rebound of coming weeks itself, whether because it's kind of like a red candle on the weekly chart itself, right? So there might be some technical rebound, but to me, any rebound will be more likely on the downside. Uh, but of course, you need to break 33,000, 300, followed by 33,000. Then we will see the goods or significant level support at 32,500. All right, so let me just write eyeing break 300 to see. Okay, this is the field level. All right, so this is what I'm monitoring for Dow itself. So if let's say you have been following me closely, you should have aware of this trade, whereby I posted in my Telegram group. As you can see, during the point when I post this chart, it's only at 33,000 of 34,000, very close. You should have easily making 400 or 700 point if you follow me closely. After it break down from the daily chart, the downside is more significant. All right, so what happened on last Friday? Let's take a look before we continue on the chart itself. We can see that most of the index has actually dropped on last Friday itself. Of course, during the day itself, they tried to turn green, but then at the remaining of the day, it closed red and it ended at a red day. So the latest reading of the PCE, right, consumption expenditure, when we also used to measure, or Fed used to measure on the inflation metric, came on Friday. So called this PCE is actually, what's the difference is that you take off the volatile of the food and the energy price, because these two is the staple, is definitely. So by taking these two, if let's say it rolls, right, so they are expected that uh no the market might take it as like, oh, the inflation rate might not, you know, will be at a high side. I mean, most likely that the Fed will continue to increase the rate itself. All right, that is what happened on the market as well, and also investor concern about the potential of the government shutdown. This is what is happening during this weekend. But like I say, it's also short term, but it's enough to shake the market itself by a little bit, whereby 500, 700 point or 1000 point is possible as well. So hopefully you guys know how to protect your own portfolio itself. All right, so next thing, I understand that Chinese economy is not performing well if let's say you're trading on Hang Seng or China A50, but this is a good news that published as well. China economy is more stabilized at the moment, and on the September I think it's returned back to the expansions after a long run of uh, decline, right? So right now it seems like China has begun to bottom out, and then things might start to recover slowly, but it's not a immediate thing. Slowly, all right. So as you can see, the China factory activity expanded for the first time in the 6 month in September. So hopefully, we have really bottomed out for the Asian market like China and Hong Kong, because I can see that most of the good shares has been plunging lower and lower, and people doubt of the quality of the asset itself. All right, so of course, don't jump in too fast. Continue monitor first. It's just the first month out of the 9 months. I mean the first out of the 6 months that turn positively. So let's continue to see how it goes. So let's take a look not only on Dow, that actually break above. Another one which I have been talking about is actually on gold itself. If you have been following me closely, you can see that from gold, I've been saying gold squeeze play out from forming real soon, right? So you should see this chart very uh, many times. I have been repeated saying this gold is going to form a squeeze. All right. So if let's say you follow my Facebook page, let's see some chart on the gold itself. All right, so this one of the gold play, I say that it's a near resistance level. We can actually do some shorting, and then the immediate support is at 1920 and 1900. So take a look. The candles on Wednesday itself is a very bearish candle. After break or broke below 1920, it continued to broke below and close below 1009, which is 1890. This is the sign of successfully breakdown. All right, so if you did not close your long positions, you should also do some shorting at this point of time, putting your stop loss above, right? Because this is a confirmation of the downside, and that is why we see that gold continue to drift lower to close at 1862 on last Friday itself. So where are we looking at gold at this point of time? Of course, we try to see the round figure, or otherwise this is the recent support, and the recent resistance is 100 1800 or 1815. I mean, we can put it there nearer to 1815. All right, so this is a very crucial point. So after you break down, after you break the immediate support, we will be looking at 1st October 2003. Gold may continue to drift lower to next support around 1815. All right, so this is my view for gold. It may continue to go lower. All right, so that is my view for gold itself. Okay, so not only on that, let's take a look at US dollar. I remember I spoke on it last week as well. As you can see, based on my chart, I'm not only saying down, I said dollar trying to break above 106. Highly possible, all right, as Fed may intend to keep the interest rate higher for longer. And then it touches like 3 times if I'm not wrong. So that is why looking back at chart of the dollar itself, it indeed break or broke above 106 to the highest of 106.80 plus, and then pull back, and then right now it's still staying above 106. So dollar may continue to strengthen, depend on the rate itself. So dollar may continue to strengthen coming up as well. But do take note, one thing to take note, dollar has been consecutively upside since 17 July. I think there's 11, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 sessions of upside. Alright, gentlemen. 11 sessions of upside without any pullback. Alright, so if on weekly or daily, if it close back to 106, we may see some pullback before we see another upside. Okay, so where is this pullback? I mean, you can use your own strategy to monitor, or you can always do Fibonacci to look at where is the retracement. All right, so otherwise we'll be looking at the midpoint is around 103, 104. It's a good pullback area for you to ride on the trend itself. All right, so let's take a right up right now. So okay, so first October 2023, dollar running 11 sections, weekly upside, may see some pullback to around 103-104 before continue uptrend. Okay, so this is what I'm looking at right now. So I believe there is more room to go up for dollar at this point of time. All right, so let's go into individual counter as well. Firstly, we were going to US oil. I remember I mentioned there is higher chances that it may hit above 100 uh, by the end of 2023, and that is what analysts out there is expecting, right? So, however, the resistance level may hit before 2024 is around 92 to $100. This is what I draw previously. So, based on the day chart, we can see that the oil price indeed trying to penetrate above 92, 93, where there is a couple of resistance, but then it pull back. At this point of time, there is still no downside, it's still upside trend, as you can see from this yellow line, ascending triangle. So you may want to wait for some pullback, successfully touches before we actually eye for the next upside. So it depends on where is your probability, what is your risk management like. Do you prefer the pullback or do you want to chase the market based on price actions? So you decide yourself, but to me, I am biased on the upside as well. So this is the and then I will just do some writing. Today is 1st October. Bias on upside. We think for US oil to have decent pullback around 103, 104 since alright, so this is what I'm trying to say. Okay, US oil. Okay, so that is what my take for US oil at this point of time. So let's take a look at certain stocks instead. Firstly, let's go to Hang Seng first. Let's see how it performs since we've got the Chinese news, right? So for Hang Seng, we can see that he has been running consecutively, drifting lower and lower and lower. That on last Friday, another engulfing up again. So right now, this is what we draw previously on the Fibonacci. We know that the market is actually trading and playing around this area. Uh, this area, right, is very significant, which is the 38.2% Fibonacci level. So it break below the 38.2% Fibo, which is 1007, 1000, 1700, 700 lah. All right, 70,000. So it's actually hovering around this area. So after it broke down and then right now it covered back. So I think 38.2% is a significant stop loss. I mean significant support level. So we can actually just write here 1st October 2023. So 38.2% Fibo and 7, which is around 1700, okay, 70,700. support level. Okay, so break below 38.2%. All right, no reversal in Hong Kong may highly possible to continue to drift lower. Okay, so that is my take for Hong Kong at this point of time. Of course, many shares, if you go and Google, you can see that most of the shares is on the red as well, because the index is in red at this point of time, right? So we won't go into individual counter, but of course there are a few counter which I'm doing dollar cost averaging. One is JD. I know JD is very, very disappointing. It's a good in the fundamental wise, but the market has been drifting lower and lower. If you realize, right, it has been drifting lower and lower. All right, can you see that? Pull back and drift lower and lower. But I'm not surprised because support level is around 27.30, which I charted previously, right? Whereby you can see on the 27th May, I did say that we can start dollar cost averaging on JD, and I also put some level where to do the DCA, right? So support level 27 and 30 in between is actually the second DCA level for us to average in. So if let's say you have been following me closely, you shouldn't be panicked because you plan to what you are be trading, right? So right now, coming to this area is actually fantastic for me to buy on it. So I will look at how the Hong Kong and the China market index performs before at the night, because the Hong Kong is running in the afternoon, right? So once they are positively good, then at night I may review the chart and it's might enter my second war chest in this second support level around $27 or $30 for JD before we continue, right? All right, so that is my take for JD right now. Okay, so I may just write on to it. 21st October, we see good support around 27 to 30 to perform my DCA on it. Okay, so that is my view right now. So let's take a look and see how does it work out. All right, so next thing we will go into next few counter. One is actually Lee. Remember I mentioned Lee Auto as well. Sorry, I think I closed my Facebook page. In my Lee Auto, as you can see, not to buy after it penetrate above $40.53, and this is what I wrote in right on the 13th August. All right, break below 40 may see more downside. So going above here is not a good chance to buy, as you can see from the chart perspective. Always reach $40.50, it will close below, right now, close below. So if you listen to me, it's either you, I mean, you after you listen to me, it's either you did not place a short, you prevent yourself from going too long, or you cut your whole portfolio while it's actually above to earn your profit first. Congrats to you. At least you know what is happening in the market. All right, you don't blindly just keep buying up. All right, but if let's say you close at the top right now and you buy at the bottom price at 30, close to support level at 35,000, sorry, I mean the Lee is close to $35, then you also benefit more than you enter above $40.50, right? So hopefully you guys listen clearly and also remembered what I've been sharing. I may not be 100% accurate most of the time, but hopefully most of the time I did bring to your attention of the stocks you are holding, or if you are interested to participate on opening a new position, whether it's long or short into it. Okay, so let's take a look at one last counter before we end it. It will be Tesla as well. So I think I talked about Tesla. All right, so Tesla pull back, go up, drop is near the support level. Okay, so same as what happening to Dow, right? So 2 point to watch out. This is the first resistance level. This Fibonacci at 38.2%, which is around 220 at as the second support level. Breaking these two will not be a good sign. Okay, so let's take a look on 1st October 2023. Break below 38.2% and 220 will not be a good sign. More downside instead. Alright, so that is what I am monitoring closely. Wait for it to break. Alright, wait for it to break, because if you go nearer, it can be a strong support to rebound from there. So wait for it to break, and not to forget, for Tesla, I think there is a lot of next week there's a lot of news is regarding to report their how many cars have they delivered on the month of September itself. Alright, so Tesla, maybe a lot of news coming up for next week, so monitor closely if you do hold on to it. Alright, so that's all for this week weekly market update. As you know, I'm more on the downside for Dow, downside for gold, and also have to monitor it whether we continue the downside for Tesla as well. Alright, so that's all. Hope you guys enjoy. Remember to share and like my video as well. Goodbye and see you guys next week.